Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Today is Tuesday, TGIT, 22nd of September. Holy
Daily
moly,
Brief
time's
Recap.
just flying by here. Today
looks like we're live on
is
YouTube, so that's good.
If I'm not mistaken, actually, ironically enough, we have tax deadlines actually coming up here, and it might actually explain one of the reasons why the stock market is actually a bit weaker of late. Just purely people finally have to pay their tax bills, and probably saw some people hitting the bid there in stock market recently. As well too, and I think it's like a COVID thing, but the head of the U.S. Federal Reserve, Mr. Powell, and the current Secretary of State, Secretary of Treasury down in the States, Mr. Munchausen. I don't have a high regard for him, but anyway, I suppose he's professional in his own regard. They are having their testimony today in front of the U.S. Congress, and of course it's just an absolute political mess. Any sort of public events there down in the States right now. So unfortunately, it's a little bit biased. But what I did sort of see watching the event was didn't see any stress in any of the politicians' eyes with regard to free fall of asset prices. Didn't see any stress in either of the banker's eyes or Secretary of Treasury's eyes. So I get the impression from the market it's sort of like these guys really aren't that worried. And on top of the political grandstanding, I just sort of got the general tone that these guys would encourage Washington to do some more stimulus to encourage the U.S. economy along, but none of the politicians seem to be in a big hurry. Now, usually what happens in this kind of event is, like we said, the stock market has kind of rolled over here. I think the stock market needs that stimulus to keep the fun and games going. And my hunch is their hand will be played, the politician's hand will be played by the market if the market starts to really tank in earnest, just like you saw there in March, and actually almost every single sort of stimulus package that's ever passed, it's usually done in the face of a collapsing market. So my hunch is, and Mr. Powell basically said that I anticipate that this next stimulus package will happen in the next few months. So what he's basically saying is expect the market to come off a bit because we have to get you politicians off your butts to actually agree on a next stimulus package. I thought that was interesting take. That was the interpretation I heard from him. There's also a couple fun things. He let slip that maybe all of the bankers don't actually vote at these committee meetings. And actually they get their orders from some other people. I thought that was kind of a fun little tell. It was also really interesting to listen to the politicians on the left say, oh, this president's a nightmare, right? And then the politicians on the right say, oh no, everything's awesome. Typical politics. Anyway, looking at the market itself, as I said, I got the impression from the politicians that they're in hurry up and do nothing mode, whether it be the bankers, whether it be the Treasury Secretary, whether it be the politicians, the senators, House of Representatives, the Congress people. Nobody's really in a big hurry worrying about asset prices right now. At the same time, too, this COVID data, in Canada here, they're actually talking about starting to shut things down again. In Europe, I'm hearing shut things down kind of talk a bit more. So we're not out of the woods on any of this stuff by a long shot. And I think the market is sort of sniffing that out. It can smell that. Interesting through the testimony. And also, too, I got the impression that the bankers are very happy in the States. They're just business as usual. They've specifically said, we will lend you all the money you want. But make no mistake about it, these are loans. They are not grants. We are going to charge you a nice fat interest rate well above what we're even paying in short term. So we're guaranteed to make money. But make no mistake about it, this is not free money. These are loans. So I think the banking system within the United States is actually in a pretty strong position because they never went down that second bailout sort of road. But at the same time, too, you can sort of feel the pinch. And like I said, more COVID. I heard today 40,000 students in the United States have been tested positive for COVID since going back to school. Why? I'm surprised the major media hasn't jumped all over that. That seemed like an awfully big number. Anyway, so, how does this play out? I get the impression the stock market's kind of on its knees right now. It will head lower until we get sort of, a big fat W in price. And my hunch is that all sort of develops around some sort of emergency passing of stimulus packages by the U.S. Congress. But it's not today, and they are definitely in full politics mode right now. No budging on either side. So, in that sort of environment, actually, it doesn't surprise me that the market's kind of like, well, do I really need to take a risk here? Maybe I'll just go park my money in U.S. Treasuries, U.S. T-bills, and just bury my head in the sand. We had a precipitous drop yesterday in the stock market, but you can see late day they sort of brought it back off its knees. And lower highs and lower lows. This ABCD now I think is valid and it's working. So really I don't see any reason to step in front of that. The oil market, we talked a little bit. So we're still in this short. Paper trading, of course, for you guys. Just demonstration. And I think now, you can actually see if we lose yesterday's lows and the stock market loses yesterday's lows, more continuation. But if we lose yesterday's lows in the oil pits, that'll be a nice fractal. That'll be a nice empire, which ironically enough is actually a new sell signal unto itself. So if that empire does fire, then we will move our stop down to this high and lock in, what about 30 cents of profit? Woohoo! At the same time, too, we also talked about this yesterday. Watch the gold here. Does the gold actually break down? If that oil market is as weak as it is, this gold market should hold these lows. But as it stands right now, our recent propensity to get bullish was taken off the table with this new M that's confirmed here. And if you are a bull, we have one low, two lows. You got to really see some nice structure develop here. So, just big hurry up and do nothing there. And the silver market, we warned you guys, silver market, they are horrible people. Very, slightly crooked. And I see that they're still playing their games there. And I think they're still sort of unwinding this trade. So really, any reason to step in front of that right now? None whatsoever. So just a big hurry up and do nothing there. Interesting thing about the gold and silver, though, maybe they just clean all this shit up here while we're still in September, which could set up another big honking counter trend rally back up top. And I thought it was interesting. I did a wiki search on the Jupiter, Saturn, Pluto crosses. And they're really excited about December 21st, which is forever away. And it turns out that the last Jupiter-Saturn cross conjunct on that one in particular for reference, I don't have it in front of me. Anyway, I was posting in the lounge. Last time we saw one that was similar to that was the year 1623. And what's really interesting is think back in history. Do we hear much about what happened in the 17th century, 1647? What happened in 1647? And you also think about it too, kind of like how did we move from the medieval age into sort of the, horse and buggy, sort of, railroads, industrial age? It was sort of through that window. So in a weird sort of way, I get the distinct impression that the 20th century is going to be like that 16th century. Why do they call the Dark Ages the Dark Ages? Well, it turns out that actually the world went dark for a few years. A big volcano, Punatubo, I think it is, blew up in year 532. And literally the whole world went dark for like a couple years and massive starvation. So, I got the distinct impression that this 20th century is actually one of these transition windows, and it kind of makes sense. We're not in that industrial age. We're not in the horse and buggies. We're not in the railroads. I mean, maybe railroads are, yes, still being used, but they're not the same thing as they were then. Hell, General Motors talking about building flying cars now, actually producing flying cars. Like, what the hell? So, I mean, obviously that's bigger picture, pie in the sky, Brian rhetoric shit, but this is a pretty damn big event in human history that we're actually living through right now. So, if nothing less, enjoy the ride. All right, back to our story. Sorry about that. And Kevin's probably like, Brian, you're sitting there blabbing again. Okay, where are we? So I can't really get bullish of the gold here. It's silver's trade, the short trade's working. Interesting how bonds have just sort of parked themselves here through this. Bonds just not getting much of a bid through this stock market pullback, which is a little bit surprising. And I've thought, my conjecture is that the Fed's actually basically telegraphing to the public that you should actually start expecting bond prices to start trending lower. And, this is, 1980 was the war on inflation transit, where the world went from rising interest rates to falling interest rates. Now, well, inflation is good, right? So now, ironically enough, we're probably going to transition from a falling interest rate world to a rising interest rate world over the next 20, 30 years. As a pretty good anecdote of risk on, risk off, we got a big fat fuck you out of the small cap market yesterday. I mean, I apologize for the profanity, but there's no other way to describe an outside downside bearish key reversal. That's fuck you. So with that said, obviously, and even Kevin comes on and does his presentation through the call here today on Tuesdays. He's even looking at that, it's awfully tough to get too excited about junior stock market right now. And it's interesting, right? Because our breadth indicator as a measure of the S&P 500, still building this out, right? It's the S&P 500. At some point, I want all of this in this breadth indicator. But the S&P 500 themselves, they did start to flash a little bit of bullish, and we have had a few names that are looking okay. But we're kind of floundering here. I'd really like to see this turn up. I mean, you'll see it in the stock market. If the small caps can start coming back, like I said, nasty outside downside reversal here on the small caps. I mean, we need to see some serious outperformance. We need to see the U.S. dollar index inside bar and start to break back down here. We need to see some sort of W come in. We need to see, the oil put in some sort of bottom here, maybe reload zone W out. That's all got to happen for risk to start getting happier again. And frankly speaking, considering it's September usually is a bad time of year in the market anyway, really this is actually par for the course. In the corn, and really I might argue, and I've shown you guys this image repeatedly, I believe that crypto is actually an excellent sort of leading indicator in the risk market, and I think risk has broken down. So until this all starts to W out here right now, I just gotta cool your jets. You could go value buying. I think I bought a cute little stock, my size. One of Jamie's picks, paid $1 for it. It's not a bad stock. Actually, I paid 96. For the record, got to make sure we're correct. Anyway, nibbling names. I've talked about that stock. Actually, that's this one, right? I've talked about this kind of. I like coming in, and altcoin land. Actually, it's the same thing. Back to crypto. I love coming in at the bottom end of ranges and just nibbling away. So this has been my buy list for the past month or two. Pretty exciting stuff, eh? Where I'm just coming in Market's trying to bottom, just throw your bids in down the bottom of the range. Market's trying to bottom, go throw your bids in the bottom range. Market's trying to bottom, go throw your bids in the bottom range. Market's trying to bottom, blah, 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 blah. Rinse and repeat. Am I going to hit the bottom on some of these? On any of them? Maybe. Maybe not. On some of them, like this Decred, you can see he's kind of said, well, sorry, Brian, I don't think we're bottomed yet. And if you look at this, you can see he could go down a bit more here. But same sort of thing in the stock market. If I'm going to buy anything, I'm a cheap ass. So I want to buy at the bottom end of trading ranges. And you can hopefully see the same logic here. So I don't mind spending money on names like this. Interesting price, 999,999. Actually up on the day, so well, that's good. But if I was going to spend money in the stock market, this is the kind of stuff I like to buy. Does it mean that this is the bottom and these lows can't be taken out? No, doesn't mean that one bit. But if this thing does hold and it starts turning up, if I got some room to make some money, I think so. Just off of this crazy range, 50%'s up at $25. That's nuts. I mean, does it go there in a straight line? Obviously not. But anyway, point of the matter here is in an environment like this, especially September, October, by when it snows, right? So really, should we be getting too bullish right now anyway? Not really. Am I willing to come in, Danny Nibbles, buy against bottom end ranges, doing a little fishing? Sure, love it. I like to stay busy, but keep in mind I don't put much money in these trades. So, and also too, remember I've got interesting. I took long shots. I might get stopped out on my little cruise line bet, the little inverted head and shoulders. Not yet. It hasn't happened yet. But also too, I've got insurance policies, so they're actually working away. I remember, Brian, I've got my ass covered. I'm all over the market. Calls, puts, long, shorts, you name it. All I want to see is volatility. If I see volatility, I'll make money. All right. I sure hope I'm giving you some value here today. Finish off this conversation about crypto. I get the impression, actually, I put a fun tweet out yesterday. It's a little bit facetious, but having fun. What the hell? That if you look at the current trading range of the corn, let's just look at it off of this most recent range. I think you can make the argument we slammed down into a reload zone against a whole bunch of key lows here, and gee whiz, what a surprise, we actually found some buyers. This is also the POC, right? The point of control. So it would make sense that there's going to be a hell of a fight here. If we go and am out and lose the POC, then we probably got to go back down to value low. If we hold these lows and turn back up, then we're probably going to rally back up into reload zones and right up against this node. And basically, it looks to me like the profile ultimately wants to look like a parabola. So you can see here that, hey, this parabola looks pretty well defined here, but it kind of looks empty all in here, and even a little bit up here. So could we see price work its way back up into these areas to fill in the parabola? So by the time we're done, all of this is filled in. Seems perfectly realistic to me. So, if we can get those dead cat bounces, those counter trend rallies up into what I would consider, remember this was this big honking head and shoulders. I really wanted to get short up in here, but the market just didn't give me anything to work with. Could we now maybe, if we're really lucky, do something like AB, CD, our way up into that area? That actually makes sense. And if this was on a nice divergence, any kind of top up in here, and I finally get my awesome level to get short. So that's kind of what I'm thinking. If I can get this, then I get to do a trade. Otherwise, I'm just sitting there just twiddling my thumbs. So, just an FYI on the corn itself. Now, the one good thing that I am sort of seeing, and what sort of maybe leads me to believe that maybe we can have a little bit of a counter trend rally here, is the DeFi space obviously was dominating. All the money was pouring into those names. Maybe a little bit of FOMO. A little too far, a little too fast. And of course, names that were good fundamental picks, they just went absolutely ape shit. And unfortunately, the public always comes in at the top and buys the top. You guys know how this story goes. So, something like a Link. Just an absolutely fantastic buy right here. And you got your sell half on a double here, so you're in a risk-free trade. Then once we start going in here, you better make sure you got another sell half on double. In fact, actually, yeah, here are all the levels. Boom, boom, boom. So in this particular case, if you had just taken a very conservative, very slow approach, you would have gotten 3 doubles off. And, kind of our fun little talk about the way the market moves in a very parking garage sort of way. What you see here now, of course, is that they're just unwinding the kind of silly, over-enthusiastic, maybe a little over, FOMO. We're all gonna get rich. It's a great fundamental story, but you can't chase. You're not allowed to chase. So, reload zones of the entire range. Gee whiz, look at what we just did. Doink, there's Mr. Mountain Man. It's ridiculous how cliche this shit gets over time. So, they've taken the fluff out of the market. Phew! So, if nothing else, you can at least, like our rule is, if you want a dollar cost average or something like that, wait for the reload zone, and now you can at least start getting those kind of plans going. Up here, it's dangerous, and you're just asking for trouble, and sure enough, that's what trouble looks like. If you got trouble, wait, don't run. This kind of trouble is lots of fun. Pop the matic, pop the dice, pop a 6, and you move twice. Woohoo! That's sort of like the investor kind of conversation here. The trader, right, looks and sees 1 high, 2 highs, 3 highs. Fuck me, I bet you there's a trade here. And that sort of looks something like, where was it? Anyway, it's on here somewhere. It's one of these screens. One of these screens is not like the other. Where did I put those? Over here? I think it's over here. Link. There it is. So that looks something like this. So there's your 1 high, 2 highs, 3 highs. There's your sell signal. Market smiling at you. How many more cliches can we throw at you? So this particular setup is looking for an A, B, C, D back into this Mountain Man level. Not quite sure what that meant. I guess this must have been off of the entire range. Yeah, going all the way back to the lows. So, I don't know. It would make sense. Look left. Where is key support? Right down in this level here. So, had you taken this bot short, really nothing's changed here. At 66% of the anticipated move, it's generally a good idea to start locking in profit. I also... Excuse me, holy hiccups. I think I got the hiccups when I started talking about this thing yesterday. That's funny. Something about Lincoln hiccups. I think this is Chico. He's channeling me from the other side of the world. Don't talk smack about my coin. Off of this range right here, this little battle right here, created a cute little Foggenbaum study. And I do find it fascinating. Man, I'm really learning more about this crazy chaos Foggenbaum stuff. There is Mr. Foggenbaum's chaos level, and notice how the market slammed down in there. What do you think the public was thinking on this candle? I bet you they were thinking, this is the end of the world. It's all over. And what you don't realize is actually this is the end of this move. This move, actually, this is where you go, oh my God, it's the end of the world, because you see the market smiling at you, and you know what to think when the market's smiling at you, right? Ironically enough, at this point, you should actually be thinking Foggenbaum's, all right, this is the public now coming in and panic dumping, and lo and behold, what a surprise, the goddamn market's sitting, and it has for This is a 4-hour chart. 1, 2, 3, 4, 5, 6, 7, 8, 9 4-hour bars. That's like 40 hours. It is just sat right on this goddamn fucking bomb level. I mean, that's incredible. You can't write this stuff any better than that. So, whether you use things like moving average crosses as your stop level or use market structure as your stop level, I get the impression if we just can't punch our way down into this bot level, you're probably best just to hop off if you did take this bot. And that's what would be my sort of strategy right now. Wow, what a cool anecdote of Mr. Foggy. As you can see here, a bunch of squiggly lines, nothing really to get too excited about, but I was pleased to see that, some of these things are starting to look exhausted to the downside. Starting to get divergences. Starting to see W's coming in. So, if anything, maybe we can be kind of like, okay, maybe they just calm down a little bit and stop selling. Which is so funny, right? A week ago, we were all like, oh, this is the next best thing since sliced bread. You better get in. FOMO, FOMO. What? No, hopefully TRI wasn't saying that. Anyway. So, backdrop of crypto. Stock market, kind of feels like maybe we've gone a little too far to the downside here in the short term. I'm getting the feeling that some of the better quality names within the DeFi space are trying to turn. You can see this YFI is trying to hold these lows. There's probably going to be a fight in there. Look for counter trend rallies back up in against these highs, right? That's a pretty good trade there if you can get that off. This KSM, same thing. Look how it's come right back down to its original W. So, and then also, too, I think we talked about this. I don't like the look of this one, because clothesline, we've closed below there. But, if you're a bull, watch for W's to form through here. I don't have any justification for doing anything here. But the point is, these things are looking a little better here. So that's good. And what a fucking kick in the pants. The only thing I wanted to buy. Sjord there, Mr. fucking Genius dude, right? Programming TRI's future. There he is. Total awesome Lego dude, man. Says the other day, oh, by the way, Brian, Davos, which actually I listened to Davo this morning. He's got a fun little broadcast that he does. I don't know whether he heard about this damn DREP, but Jesus Christ, that's like I know it looks stupid here. But the signal came in at 25.26, and the goddamn thing hit a high here at 32 this morning. That's like 7 cents on 25. What is that? That's about like 30% return, while the rest of the market's just fucking off. I mean, what the hell? Oh, and I can't get filled, bastards. And what a chart! And I put a tweet out to this effect. We give this shit away for free. So talk about PMA. I mean, I'm trying to build up karma points here with the universe. You could come on this site. You could sign up 30-day trials. Hell, you could fuck us over. Create like 10 different Yahoo accounts and just basically steal from us if you want. And we're giving this stuff away for free. So there's karma for you. Universe, can the world come and fuck us over? Nah, how can you go wrong if you're just giving stuff away for free? Obviously, no guarantees from the management. And if anything, it's just such an awesome testament to our future. We've almost got the computers taking over. As soon as the computer's taking over, and I see that they're just humming away, just doing their thing, I'm probably going to retire from all sort of public interaction. Because I won't need to. I'll just let the computers do it. And I'll go off and maybe start that orphanage over in Hawaii that I've been talking about for a while. Anyway, Muse. Jeez, what a beautiful chart. Just absolutely textbook. So, that's sort of your market state. I sure hope you enjoyed the show. Edutainment. I think I even remembered yesterday, I was like, this is so cliche. Can't embody those. Just hunt for trade location. Dips, wicks and tails like to be eaten. And sure enough, They dipped it back. I think this was like the Asian. Oh, that was even the London kill zone. So they dipped it right against these tails in the London kill zone, and now they're going to climb it back higher here. What a surprise. Anyway, slow and steady wins the race. I mean, for a guy like me, Bitcoin's pretty damn expensive. If I did want to buy Bitcoins, I'm going to be watching our little fundamental tools and lining them up with technical levels. And slow and steady wins the race. Don't chase, don't chase, don't chase. All right, everybody. Hope you enjoyed that offering. No idea if I gave you any value. Super fun market, though. Great time hanging out with TRI. Fantastic people, fantastic tools now we have in place to basically, own the world. Super excited. All right, have yourselves a great day, everybody. All the best. And the only thing left for the old man to say at this point is a big bye for now.